Hey, good morning, Dark Horse members. Hope y'all having a wonderful day. So make sure, so I'm going to be releasing some more content as far as really breaking down what it is to be a contrarian investor. Okay, and that is what we really aim for you guys to become is to think more contrarian like. So in the next couple of weeks, you can expect we're going to focus on releasing. Um, some content to help with understanding the psychology of self sabotage. Self sabotage is very huge in this industry, but it's huge around the whole entire world. A lot of our conflicts, a lot of things that we do, is based off of self sabotage. And a lot of you guys, too, are sabotaging. You're doing uncharacteristic types of investments. You're hopping in and out of things. You're not trusting the process. Some of you are sitting a little bit too much on the sideline and not really putting any capital on the line to make it happen. And then when you do, you're doing it from a state of fear. Um, so you led by your emotions. So we really want to tackle that. So the content is coming out. If you notice, I try not to make the content too long. All right. I'm really trying to cut down on that. Do got a lot of moving parts, a lot of pieces. But when you look at it from a macro, it looks like a lot. But when you break it down, it's really short and sweet. But get to the point. Listen, there's many books out there. You could go from chapter 1 all the way to chapter 30, and it's a lot of redundancy. People saying the same thing over and over and over again. They're just flipping it, making it sound a little better. All right, and they're just stretching it out. I don't really believe in that. I really believe that we really can keep things simple and get to the point. Okay. Um, for you new members, do not get overwhelmed with the content. If you already have experience with trading, you got a lot easier than a lot of people. You already know how you can see value and you can see something that where you're going to put capital to work, you're going to let it do its thing, right? So you don't have to get caught up in all the, you know, the technicality of how to trade and do all the other stuff, right? And some of you are already great with technical analysis. That's good too. Do you need to know technical analysis of investing? No, you don't. If you understand the fundamentals of something, you understand something is at a great price. If something was $100 at one point and now it's sitting at 50, I mean, you can do the simple math. That's what 50% discount. Do you fundamentally believe that that asset is going to do great over time? If the answer is yes, what do we have to debate? It's not a debate. It's at a 50% discount. You can buy it. There's no such thing. Well, some of you do it. Oh, I'm going to wait till it get down to 30 and do that. Here's what I want you to understand. Bitcoin was once at $100. Bitcoin was once at $30. But let's say, for instance, it went from 100 down to 30. That anything below 100, fair game, right? Why does it matter about having the perfect entry, so to speak? When we all are looking at this screen right now, we see that Bitcoin is sitting at $58,000, and it was at 69,000 at one point, right? The person who bought it 30, and the person who bought it 100, the person who bought it 200, the person who bought it 85, 75. What does it matter in the grand scheme of things? It doesn't matter at all. Okay. So that's how I want you guys to look at this. Stop getting to the point where you're trying to find the so-called perfect. Your account going to be red on some days. Account may be green on some days. Your account may be extremely green and then you have a pullback, but you're still up. This is 2021. What? How will you be in 2030 if you're granted to live to see that long? 2028, 2025, 2022, 2023, whatever the case may be. I need you guys to be thinking about that. So, like I said, a little bit more on what contrarian is, and we'll be putting out some content for that. We will be bringing it all in. Will it be a one functional type of document where you have sections or chapters or whatever. Everything will be embedded in, so you'll be able to hyperlink. You can click, it'll be intuitive to the document. So instead of coming into the members area on the website and you have to go through everything, we will be able to email everything out, be a one cohesive document, everything in flow. You have everything there. All videos, everything embedded. I will be doing some more videos on like Coinbase, KuCoin, etc., because some of the functionality of the interface has changed, and so the navigation is totally different from when we first did the videos. So we need to update. So for instance, Coinbase Wallet has just they have a Coinbase Wallet icon or link on Coinbase. So there are certain assets that you're only able to buy using a Coinbase wallet. I do have a Coinbase wallet, but I do not use the functionality of swapping or doing anything like that there. So at Dark Horse, I also want to make sure we're not really diving into things that we really don't do. So for instance, yes, we do staking, but there's certain aspects of the staking that we don't do. So that's why you see we don't really cover that. Uh, the name of the game, if you really want to be legitimate in this game, stay true to yourself. You stay within your area of expertise. My area of expertise is really in teaching people how to see value in things that others don't, and to see value in things before others do. All right, so that is the contrarian aspect that they really have the value, and that's when you're seeing the strategies and the methods. Those are all the things that I've created to help you guys get the edge, and it's all based off of historical data, back testing strategies, and seeing where all the mistakes were made by millions of people, including myself, from past. And what I do is I go back and I study the past to be able to understand where we possibly can go into the future, and I take those same behaviors. So if you look at my style, is it flaws in there? Yeah, of course, everything has flaws and cons and stuff. But knock on wood, I've been able to somewhat perfect this. All right. I've crypto is crypto. A lot of people are in winning positions, almost to the point where you can throw something in with your eyes closed, you can hit, especially in the bull market. But we were able to screen and identify some strong projects early on, and they all have hit. They're done well. And like I said, yes, it's crypto. A lot is going to do well, so to speak. Um, but we also a lot looking at these projects. It's long term. Is it going to be here 5, 6 years from now? And a lot of them are starting to turn the corner to be those particular projects that we're looking for. Um, so that's a great thing. And there are going to be new projects going. I told you guys before, if you never heard me speak, there are projects right now that somebody's building in their mom's basement right now. All right, the next Jeff Bezos, the next what's his name, Steve Jobs. Right now, somebody is building the next level blockchain tech that the world has never seen that is coming. So you have to be committed to this game, to this industry. That hey, I'm here. All right. So let me give you a quick rundown of understanding cycles. So I'm on the glass. Well, I'm not on glass node now, but here's a glass node, and I'm on the Bitcoin addresses. Now we'll have to pay to get updated, so I can get the real time. But this goes up to December. I'm sorry, October 17th. All right. So if you notice on screen, see if I can move me over here. All right. So if you notice on the screen right here at the bottom, we and trying to get right here to. All right. So June. All right. So around June, I had 859,113 active addresses. Okay, during that time. Now we can go to any other date. So that was what, June 24th. trying to go. Okay, here's this is what I want. I want the June 20th. All right. We were at 651,962 active addresses. All right. Let's go over, just pick a random. Okay, over here, November 26, 2015, it was 386,584. Now, let's go back to that June. All right, so here's June. So all of this is June. What do you notice? With all of them in June in this big, all right? What do you notice? You notice that we went to a downtrend and went into a consolidation period. All right. So in June, this is consolidating, but over here, the number of addresses are dropping off. So let's go up here to the top. So up here at the top, just pick this one for right now. Let's see if I get this. Let's add a little funny on this. All right, we do that one. Well, that's January. Look at that. So January 2021, it was 1.3 million basically. One to be exact, 1,343,925 wallet wallets. All right, this is addresses that basically that were active, right? So, and this is part of creations. People signing up, you know, Coinbase's, Crypto.com, whatever, right? So you notice that when you go to look over here, all right, there's an issue. A lot of the addresses dropped off. So there was no a lot of like almost by 50 something percent, right? Over 50% drop. So this is, shows you the herd mentality. For some reason, people like to come into the market in droves when the market is overextended versus when the market is down. This is the perfect time that you should be investing. If you're not going to build wealth, if you continue coming into markets when everything is hot, 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 and when you see red, you're afraid. Like this over here looks very good to me. I want it to come on down. Let's come down. Let's go. We can really build. And like I told you, if I'm buying an asset, let's say the asset is at $2 last week and now it's at $1.50, want to add some more. Am I mad that I got in at two and it's at $1.50? No, especially if the asset in the future is going to be $60, $75. All right. So at that point, who cares? Okay. So that's something you have to think about. Okay. All right. So you see that. Let's look at Ethereum. Same thing, right? And this glass node is in the resource section of the site under the resource guide. And like I said, when we create the master guide stuff, it'll be a section off. You can click right there. So we want to make everything seamless. You got it at your fingertips. You don't even have to go to the website anymore once we get that. All right. So you'll have it. So we will be working on that. So give us a couple of weeks or whatever. So what is this? This 2018. Okay. So let's look at this over here. So look at Ethereum. So we're back here in September 2016. You're talking about 17,889. We would have been part of that number. Okay. And then if you look over time, all right, things start to go well. All right, and then now we're up to 216,000 November 25th, 2017. And now we're up to 451,000. What does that mean? That means that the crowd is coming, but we have already established ourselves. You never want to be part of the crowd that's coming, okay? So now it's going to be times where asset may launch where we do get caught up in the in the crowd because it's just very good. It is what it is. But for the most part, be patient. Even with Crypto.com, the big news. Listen, news would never ever sustain this rally if Bitcoin is in a downtrend. If this news would have been done when Bitcoin was maybe consolidating, moving sideways, and all was running, yes, that will continue it on. But for the most part, most of all the good news stuff, it'll eventually get drowned out and it'll drop. Remember when she went running, right? She was running, but you notice Bitcoin wasn't running, and nor were the other alts. She was it was like an anomaly, right? It was just gone. And then look what happened. You have a massive correction because of that. So for a lot of these assets that you think are running right now, it'll be a massive corrections for the most part. Even Voyager is getting the exposures because it's going to be launched on Coinbase Pro. Well, you're going to get some form of a pullback because we're in a total market, pull down based off Bitcoin. All right, so Bitcoin just hit it's tinkering right now, 257,000. So, and I do expect it to go to the levels that we had suggested. So I just go ahead and pull up our fib levels so we can go ahead and see where possibly this price can come to. So now, worst case scenario, we get a 61% retracement. That's going to take us to the 44. I don't believe it will go that low, but I mean, we always just draw it up. That is a possibility. However, what I'm looking for, I'm really looking for this level right here, which is a 38% retracement. 38% retracement normally holds up when you have a pretty good, decent bull uh, run or a trending market. You may only get a 38% pullback. You can't see it because the numbers are being blocked by uh, the actual candles. So let me just move it over. There we go. So now you see 38%. So we could go down to 53,886. This is a key level that I look for. Personally, for me, any price on any of the altcoins, I'm buying in increments as long as it's below this 23% level. All right, so that's a good thing. Also, remember I told you guys, typically when we break the 23%, we may try to get back above, which you already see we have. We're on a daily chart. So let's look at this. All right. So you see we broke the 23%. All right. Let me put another arrow right here. Okay. So we broke the 23%. What happened? We came back above the 23. Remember, normally when the 23 is broken, we want to see price come back above and then drop back. That gives us a higher probability that we're going to go visit the next key level, which is 38%. And so this is the key level right here that we expect price to come down. Now, if this wick is to be covered, this could be a next level that could bring us to the 50%. All right. I don't see price possibly, like I said, guys, it still could come down to 44. And that'd be lovely if it do. For some of you who are impatient, and maybe not. All right. Notice your level in impatience. Okay, if it's too impatient, you're probably not going to truly make it into deep into any cycle. You're going to be just hopping in and out, and then you're going to have a lot of regret. So if we do get into here, we're talking about a 35%, 40% drop. Can that happen? Of course it can happen. Anything can happen in markets. But think about this. Look at this drop right here. All right. So this screamed at one point, oh, we're in the bear market. It's over with. We're done. All right. Get that out of your head. These bear markets and these bull market cycles are going to be totally different. In fact, you need to change your definition of what is a bear market when it comes to crypto, because in the stock world, I mean, you're talking about 20%, 10% at times, correction. So crypto can do that easily within a day. Okay. But this last drop was what, 55%. That's bear market. But you see what happened after that. We rallied and we broke all-time highs. Okay. So once again, I believe that we're going to see shorter so-called bear markets. And you're going to see shorter bull markets. You're going to see a combination of the two. We're in a sweet spot because we know how to what? We know how to use technical analysis along with fundamentals. So the fundamentals of none of our projects haven't changed. Therefore, we feel good. We do not care about what price is really doing. But we can get some favorable entries based off of area and zones that it can reach. And that's what we're looking for. Anybody who was looking at this drop, those who were fearful, they got out of their positions. They thought it was over with. They went on the sideline, and then now they sit here and regret. And what did they do? They went and they bought back because they thought the train had left. So they was up in profit. They see it dropping. Then they got out. All right, and then now they massively could have been up if they stayed in, but then they have to do what? They have to take the profits that they did made. They made some, and then they went back up and they bought at more expensive, so they got less of this asset or less of whatever altcoin, and bam, they had to start all over basically. And now they're hitting the regret and they're frustrated. And what do they say? I just should have stayed in. I just should have stayed in. No, you should have had a plan. Did it hit an extension? All right, so that's why we got the fib extension. What was your plan? Do you double it and take profit? Do you triple it and take profit? What is the percentage? What are you doing? You got to have a plan. If you don't have a plan, you're gonna always be subject to that. You don't know what you're doing. All right. Every asset has to be a plan. All right. It takes time to do it, but every asset has to have a plan. Um, let's look at so we look at Sheeb and what Sheeb had done, okay, and what you would notice, okay. So what did I tell you guys? I told you, I told you, I told you, I told you, all right. So look, we had the what? We had a 23% violation, all right. Then what did price do? So Sheeb, come on, keep this stuff simple. 23% broken, what happened? Price came back above the what? The 23%. Once price came back above the 23%, we went down and we revisit the key areas. 38 was what? Violated. All right. If 38 is violated, you have a higher probability that it's going to go to the 50. All right. If the 50 is violated, you got a higher probability that it's going to go to a 61. Guys, we had this zone drawn up on a previous chart. Let me see if I can find it because it may be under a Q coin. I could have actually deleted and did not mean to, but let's see if it's under USD. I shouldn't be on here. And it's okay. Here we go. So it was on FTX. Okay, so you see my zone that I have. All right, I expect price to come down to touch this zone or possibly come into the zone. But we're on our way, and I feel very confident. All right, so we had this box, we had this box drawn up, okay, and we really believe that price would have come back in, and guess what? We got, like I said, we got the 50, and then bam, all right, we got this thing sitting right here. This is what we're expecting, guys. And what does this mean? It means that you can either start buying or remember when these key levels are violated, we start accumulating. Right? You can accumulate in this zone. You gotta look at these like boxes, these zones. These are zones. This means that anything in this box or below, you're buying. If you want to throw all 100% of your capital in this, you can. What if it go? Let's say what What if it go lower? Sorry. What if it go lower? You got some more money. Buy. If you don't worry about it. Because this is what we're not about to do. This is what we're not going to do. We're not going to sit here and worry. All right. We're not going to sit here and worry. Look at this. Look at this. Look at this. All right. If I ain't show you the dates, this is January 2014 or whatever. It's December 2013. All right. Look at this. Look at all this opportunity. All this opportunity of loading. Now watch this. Even if you bought right here, and then it did all this, and you say, "But Eric, I put in all my money right here. Like, what am I gonna do? It's look, it's dropping. Oh my God, I have no more money to invest. Yeah, you're getting murked bad. See how much you be down. But the fundamentals have not changed. What are we discussing? In fact, you better go get a part-time job. You better add some more. A 79% drop in your money. If you put $1,000 in, that's $790 down. People are like, I'm losing. You ain't losing. It's an unrealized loss. You lose if you sell. Go ahead and sell it. So somebody else who want to buy can buy it. All right? People say, well, what if I just go ahead and sell and then go back and rebuy? Yeah, you can, but a lot of you don't know really truly how to do that. And that is really truly gambling at that point because price does not have to do this. You're on the hopes that it's doing it. But what we do is we use the Fibonacci's to have, like I said, higher probabilities. If this level is violated, we have a higher probability that this will be visited, but it doesn't have to happen. So you have to live with it. So that's why we have what we call loading zones. If it gets within one of those first zones, you have to deploy. You don't have to. I deploy a certain amount of capital in there because I'm showing respect to the market. You got to respect the market. We don't know what these prices are going to do. We don't know at all. For all we know, we can wake up, the internet is gone. I don't know. Okay. There's plenty of times we don't woke up and Facebook's not working, IG not working. It's anything can happen, right? So to get that out the way, we play a probability game. I want the odds or I want everything in my favor. So I use as much what we call confluence. Okay. Down 70%. You got in over here at $678. So let's go ahead and do the math on that. My calculator. So you put $1,000 in on Bitcoin at six. All right. So that's how much uh, Bitcoin you have, and we already know the price. I'm just going to do just 60,000. Just keep it simple. You got $87,000, $336 in your name right now. Who cares if you bought it at 687 and somebody else got it at 132 or 400, whatever. You get what I'm saying? It's like you're fine because you did better in accumulating. Yes, you gotta accumulate. Stop doing all these one-time things and just going about your business. No, you should be actively engaged. You should be looking for more ways to be like, hey, no, this is a discount. Should be adding more. So imagine if they did add more at these levels, and you decided, hey, this is sitting here at $158. I'm going to throw in a tax return or something. Man, let's see what month this was in. So this is in January, right? So I don't know how fast you can get the tax return, whatever, but I don't know, you maybe got a quarterly bonus from the previous, cycle of 2014 from your job and whatever. So you want to put in another $1,000, and you don't have to use 1,000. All right. Matter of fact, let's just be simple. Let's just do $300. $300 divided by 158. But that was the price. All right, that'll give you that many Bitcoin times. We're gonna just do 60,000 for simple math. On that one, you have 113,924 plus the what? The other one that is worth 87,336. You got $201,260.05. So you invested a total of $1,300. See how that you see how you use less money and got more because you invested on a pullback or correction instead of running. Why have everybody scared right here if the fundamentals have not changed? That is all I'm trying to drive home. We do not become fearful, and that is in the investment plan. If the fundamentals have not changed, I don't care about price dropping. I got out of Ripple because the fundamentals changed. It was being attacked by the SEC, and that you see how that negatively impacted it. Does that mean that Ripple's going to always be in that boat? No, Ripple's going to, regardless if they beat the case or whether it's settled, they're going to be fine. Fundamentally, they're going to be fine. But fundamentally, right now, they got impacted, and my money was better suited to be put in something else, and I have 10, 20x partial of that allotment. I took that allotment and put it in something else, and I've done well. So guess what I can do now? I can go back. I can buy more Ripple than I had previous because I took it and I used springboards for all the other things. So if I want to, I can come back into Ripple if I want to. Am I coming back into Ripple? No. Why? I use the derivative market. I'm gonna take less capital and I'm gonna ride it. Find a way. Get into we're looking at derivative. I may put $300-400 on, or I may go in with a group of guys, and we may put some money down on it, and we're gonna find the key support levels, and we're gonna put our entries in, and we're gonna just let the thing ride. Less capital, less risk. If you truly believe in it, and you can use the derivative market, and you can ride it out, why not? Less capital, less risk. That's the strategy. Something I'm looking at doing. Is it time to do it? Yeah, no, it's not. Right. So, but that's one of the ways. So it's being smart. So I hope this video helps. I will make this video public. So, and this is just to show what we do at Dark Horse, like, all right? We're Dark Horse investors, guys. That's what we are. We got some exciting things coming too as far as Dark Horse coins. Me and the fellas working on some stuff. So, but remember, we are contrarian investors. We can use this in any market, stock market, forex market, futures. It doesn't matter. We can do that. How many people use Forex truly as an investment vehicle? It's not a trading get rich. I can show you how the real money in Forex is not using leverage. It's really going in to a bank and literally physically buying the currency and holding it and still getting the same type of pips that you can get. Will it cost you more? Yes. But you will own it. Just like you own Bitcoin, I can go get the Canadian, the yen, and I can own it the same exact way. And as it fluctuates in value, I can cash in on that. So if you think about that, if you try to trade Bitcoin in the futures market, you're susceptible to so much manipulation, so much wicks coming in, knocking you out of your trades. You're losing your money, blah, blah, blah. But if you just buy Bitcoin and hold it, who cares? You're not going to get ate up by market participants who are bigger than you, know what they're doing. They got bots out there doing all kind of crazy stuff to make the game. It's a zero-sum game. For every winner, there must be a loser. And that is why only a few win, because you have to have multiple levels of losing. You gotta have a lot of losers to pay a little bit of the winners. So we got to reverse that. So that's why we got to get in when nobody else is really talking about it. All right. And then when everybody comes to the table, who's paying us? Everybody is paying us. Instead of us paying everybody, all right? Everyone is paying us. And then when they look for to be paid out, they be like, I don't know. I'm not here to help you. You're not going to make money off me because we're smarter than that. We think like a business. We buy at discount. We sell at retail. Instead, what they do is they buy at retail and then they also try to sell at premium. It's a bad combination. We could buy a discount, sell at retail, and sell at premium. We can do that. Hope the video helps. Hit the like button, subscribe button. Have a great day. Do not be afraid of the red. All right. All right. Remember, you know what I'm saying? This is where money is made. Money is made in red markets, not green markets. Because if you don't build your position correctly in a red market, you cannot realize it. All right. Remember, in green markets, our profits and our hard works are realized. But the hard work and the grinding is done in red. All right. So y'all have a great one.